Hey, welcome everyone to another session for Master Binary Analysis. I'm your educator module. Um, Today, we're going to analyze the market, see what we find. Um, I know we haven't uploaded a video in a while. We've just been having private sessions for those that have wanted them. I'd like to start off by saying that right now, today, we've had a lot of major impact news starting early on a lot of the currencies here. So, as we see, we're here on Thursday, March 3rd. Uh, so, we had a lot of news on the euro. So, what you're looking at are these little folders here. Yellow are supposed to be low impact, but in binary, yellow also has a little bit of movement once these news releases come out. So, we have quite a bit of green on the euro, along with a couple red. Um, we go down. So, this is more like a medium impact here on the United States dollar. Um, some low impact and then high impact. So, what I like to do is let the red folders pass the time that they're supposed to come out and see what kind of impact it has. Usually with red folders, you'll see major moves down, major moves up. And as you advance in these courses and learn the markets better, you'll see more times out of uh, just studying that these news events are only meant to make price go to a very important level that would have otherwise taken a long time to get to, and we'll go over that uh, later on. But now we see the Canadian just had news, and it's expected to have some again later, as well as the USD. So it's still, anytime there's FOMC news, there still will be some movement. Um, it's For me, I kind of like to think of it as an excuse to move uh, the currency value to a certain point where naturally it seems like it wasn't getting to. So you see, we have a lot of news today. So one other thing we'll go to is our currency pairs. Okay, we see AutoCAD. I really don't like the move it's doing, so we'll go to the next one. So we had a session earlier, and we actually ended up going 2-0, which is really good for a um, day of volatility. Plus, not to mention, we have major world news almost every day, so we're not seeing price behave in a normal fashion. We're seeing a lot of spikes, a lot of major movements. So, um, yeah, we'll see what we find here. So, a lot of our students always ask why I have so many lines up here of yellow and red. So, pretty much they're all institutional numbers, whole numbers, and halves. So, if you see here 500, 400, 300, 200, and normally that's where a market makes little pivot points. Of course, it's not going to respect them every single time. So, I have certain indicators on that I like to go off of, and it's just an added confirmation. So for me, when I take trades, um, I need at least a few confirmations um, to really say yes, I will, or no, I won't. So as I see here, where this fib level started, so I went from high to low, and I reached a pretty good level up here. Personally, I missed it. I was trying to get this meeting started, but I also like this level here. So we saw where price went up, came down to it, and then bounced back up, never came back. Price made its way back down, it used it, went right back up. And it's on its way down to that price now. Um, I like it. I have the 200 EMA right here. Um, I believe it can respect it one more time before finally breaking through and then bouncing up. So I'm getting to an oversold state on my indicators here. Plus, I also see that an important time's coming. So like when I'm analyzing, I like to look at a certain time of the day where I can expect certain pivot points. So pivot points meaning it came here, going down hard, hit its pivot point, up. Okay, and we see that was a long time ago because we're looking at this on the 5 minute. Now, mind you, all these, all these can disrespect at any given time. This is the market. It's not always going to be 100%. There is no such thing as a trader that goes 100% every single time. What we do is we pride ourselves on having the best possible entries. We don't take something that we say, well, we have 0.5% of a chance to clear. We go with the best absolute chance. And if we can do that and win, even if it's 2 trades, 3 trades in a session, it's better than taking one that you didn't trust to begin with, and then it go the wrong way, and then you end up, starting to chase it. So what we do is we take the best possible trades with the very best percentage of a winning outcome. So here we're going to have our broker set up. Today we'll be using the race options. So in the different links we've left, we've had Tradeonics, which is a really good broker. Race options, we've really never had a problem with them. I know there's a lot of bad reviews and people that have a hard time getting their money back from Vide Forex. And we've had accounts with all of these brokers, and you will run into certain problems if you don't read the fine print. So for example, Vide Forex, you can't go and say, well, I'm going to fund account with $1,000, take 100% bonus or whatever bonus, and then not complete the turnover. The turnover is really, really important. You have to meet that turnover. So if it tells you need to make a 3x rollover or turnover, I'm sorry, that means the amount that you got after the bonus, not the amount what you deposited. So if you put in $1,000, you don't do $3,000 of turnover and expect to be able to withdraw. That's not the case. So if you took 100% bonus and you got $2,000 in your trading account, you have to turn over the account. USDCHF, was that USDCHF? Okay, so we just got a alert here on USDCHF. We expect a point to reverse there. So we are in an oversold position here. On our last session, we had charted this out. A good area for a pivot or reaction. So far, it's going down a little bit more, but that's expected because we have a whole number here at 900. So we took 912. a total of 912. We're at that 15-minute mark, and I'll explain that in a little bit. But back to the brokers. So you took a bonus. You funded your account with $1,000. You took a bonus of 100%. You now have 2,000. Well, what happens now is you have to turn over the account $6,000 before you are able to take a bonus. I mean, to take make a withdrawal. So it's not the $1,000; it's the $2,000. Okay, so you have to make 6,000 of turnover, and depending on what you have left, well, you can't say, well, I made. Well, let's say, for example, is with your actual net amount, you say you went from $1,000 to $1,500 on your net, meaning you have to deduct the bonus amount. The bonus amount you cannot withdraw. And a lot of people don't understand that. You cannot withdraw a bonus amount. So give this more time. We didn't get 900 yet, but it's okay. So for example, this is turnover here. This is one of our newer accounts. This is the total turnover. Okay, so if you would have funded your account $1,000, taken the bonus of 100%, that means your account up here would have said 2,000, but the turnover here would have to be 6. Turnover just means the trades you took, whether they won or lost, that's going to dictate how much turnover you get. So if you did a $20 trade and you lost it, that's $20 of turnover. If you would have won that trade, whatever the payout is, so this one, it's $12. So that's $32 of turnover. If you would win that trade, that would go to your turnover amount. So what happens is a lot of people want to get a bonus, take a few trades, and try to withdraw their money. That's not the way it works. And also, even if you make the turnover, you don't want to go and have a net of, say, $1,500 and try to withdraw $1,000 all at once. That's not the way it works. And a good rule of thumb is saying, well, you know what, there's nothing wrong with even what's a good amount, 5%. We personally don't do more than 10%. 5%, that just means that you're there in good faith. You're wanting to do business. You're there for business, not to try to get rich overnight. That's not the way it works. So yeah, I mean, if you have any more questions about the brokers and how it really works and what's expected and not expected, you could always email us. Our email will be in our description. It's in our Discord, and hopefully it sheds a little light on everyone, just to really explain how it works, how it's supposed to work. So this idea is going really well. It came down to, again, see, these yellow lines are not random. I don't have them there just to try to make a mess of the chart. It's there for a reason. So if I have a couple of confirmations, that's all we need for a trade to go the right way. Now, if we would have taken a second entry right at the 900 level, well, we'd clear it without needing a roll. However, we took the 618 level, which still isn't bad. However, When we took it, price came down. So all we did was give it a little more time. So why is it going back down? Well, a couple of different reasons it's going back down. So anytime a candle goes in any direction, so for example, this one came down, went up. The following candle always goes, not always, the majority of the time goes at least half of the distance of the previous candle to continue its direction. So as we see here, this candle has a long wick on top, long wick on bottom, but 95% of the time that I've seen, this candle, the following candle, will at least retrace half the way before continuing going up. Remember, this was our pivot point, our zone. Okay, this was our zone that we wanted price to respect and continue to, to go up, or at least give us the time to potentially clear a trade. Now, just because I say at least 50% of the previous candle doesn't mean it can't make its own little fib level within this. I mean, we're analyzing this on the 5 minute. On the 1 minute, there's 4 or 5 bars on this move alone. So you got to understand that if you look at it on the 1 minute, that wasn't just one bar. See, it made all this move. See, we have a bullish engulfing candle. So we have at least a 50% retracement of that candle before it could continue going up. So looking at it on the 5 minute, all that move was just this. Okay. And of course, we didn't get the best entry, but it was the best zone, I mean, it was right in our zone. So what we can expect here is this candle, we have 2 minutes 15 seconds left on it. That's going to do its move, retracing on part of this candle before going up. I believe we had taken 912. So we should have about a minute left on this idea, which it just disrespected that. Well, not disrespected, it's still going up. But you'll see we did one rollover. You're going to see it just makes a percentage of this before going up. It's too late to roll it over. See, if we wouldn't have rolled over, it would still be in profit. But that's okay. Now, I'll show you something here. Because we'll take a fib level here. Went to the 886 of that candle, and then you'll see a retracement right off of it. This is just the distance of this candle. So you'll see it'll start going up. Still got a little time. Okay, so prices are fluctuating within area. It should just jump up right now because it already made its 886 level going up or down. There. So this is the part about trading where you can't be too emotional about it. And the reason why you don't want to be emotional about it is because the market does the market does make moves that can take you out at a moment's notice. And getting these prices are super important. Like if we would have taken 900 to 901. That's how come we have a zone here. That's the area, and we're supposed to do this for 5 minutes, mind you. I rolled it over because I thought, we needed more time, which it's okay. We still cleared it, but it went back down. And why? Well, the main reason it went back down again is because in most cases, the following candle always retraces at least 50% of the previous. Sometimes it does more, but that's how come you get the best levels possible. So if we wouldn't have rolled it, this is a clear win. We still want it with the rollover. All this is doing is probably meeting it to go right back up, or it'll go down and find a new level. So what we do is, for our own journal and for our own liking, we'll leave a check mark saying we cleared it. So we had marked it up since earlier, and it cleared. Okay. So now we'll get back to analyzing the rest. So AutoCAD, we still don't like it. Let's CHF. Well, it's really not doing a whole lot. Again, this isn't really the time to be taking a lot of trades. I mean, it's tough with all the world news, war. That really affects currencies. And as you go on and learn more about market structure and movements, it's kind of crazy when you see big world events really drive prices to important levels that otherwise you would never you wouldn't see coming. And it makes you wonder how how these things happen right where important levels are coming for, whether you're seeing a downtrend for a long time, all of a sudden you see it magically get to a strong reversal level right when something big happens or is about to happen. That's the crazy thing about market. I actually have taught on that a little bit with some of our students on private classes. Let's see, odd JPY. I don't think it's going to do much. So the move earlier, we saw it at 11:15, 11:30 is coming. This is where you could see price just shoot up to a certain level and then give the reaction. So like right here, this could drop all the way down. It's your EMA. Could drop all the way back down to 0, or it could grace us with going up to a super important level for a drop. I'm actually liking this level here. So as you see, price has gone up, goes above it a little bit, but respects it, ends here, goes up, drops, goes up, drops, goes up, closes around this area, goes up, drops. For me, I don't mind this level at all. It's between here and 75, I think. Yeah. So 72, 75 is a level that I like personally. I always try to set an alarm of just a couple points off. That way gives me time to switch on the broker and take an entry. So I'll just make an alert here for down. And I'll mark this as down. Not NZD. Did I have anything here? Yes, I do. It's gonna use that level, ain't it? No, it's not. What is that? 750. On NZD, I want it at 750. Oh, it touched. Not on the broker, it didn't touch. But there's this interesting level that's between the 786 and 886 where price usually respects or uses. It touched it and left. That was actually a good level. You see all this rejection, all this area right here. That wasn't random either. Maybe it'll give us the 750 still, because it's been going down for a long time. Yeah, it's coming down. He used it here. Now, some of the times we have students ask, well, why didn't you just take it, just somewhere in between? Well, somewhere in between doesn't exactly work, because what can happen is, depending where we land up here, so say for example, I'd have taken just randomly 6-1. Okay, a lot of times it can respect even quarter theory. So like right here, the 786 level is close to the 775. That's a quarter, 75. It could use that as resistance, go down, smack you out of profit. But as long as you were above between 950 and 975, you could have cleared that. Okay. Well, as long as you're above 750, you would have cleared it, because it could come back down to 755, spike you out. We don't take random numbers. We try not to. So like this area here wasn't a bad area whatsoever. What was that? 58. Yeah. So we missed it, but that's okay. Would I take it again if it came down here? Only if it's within this same candle. Because what's going to happen is, at some point, it's either going to use your 786 or your 886 as your last level before dropping all the way down to your 1, also known as 100% of the movement. So being that it used this area that I'm telling you, that's between 786 and 886, I forget what the number is. I don't have it marked out on the chart. But if it uses either one, it kind of invalidates this one more times than not. So if it does it within this candle, we can look into trying it. Oh, we didn't check the time on this, because we're supposed to have news, and even though the Canadians experiencing news, 130. Oh no, we're good. It can also affect other pairs. See, this is what I mean. Take 61 earlier, it would have spiked us out probably. You have 14 seconds for it to make that move. See what it does. Yeah, it's gonna use that level. So this was an indecision candle. It could go either way. we're still in an oversold position. However, it did use a level that was close, so I don't like it. Look at that. And drops. Then it'll show up, drop. So that last one's an indecision candle, doesn't know where it wants to go. The important part is it already respected the 200 EMA. Our 50 EMA is still way up here, saying it's got room to go up and then come back down, depending what market makers do and how price moves. But let's not get stuck on any one pair. Nope. Let's see. It's really consolidating. The euro made some crazy moves today too. So our session earlier, kind of show you this a little bit. So we took a level around right here and here, and I'll explain why. Sorry, last candle. Okay. So initially we had our fib level here, and we're waiting for the 886 area, and it actually touched it and then started going up, then dropped. So we rolled our initial entry, which was here, and it came down more. So what I did was I moved our fib level to the last previous low, which was here. I said, oh, this is our true 886 level here. And this one we rolled the first entry. This one was, one, we didn't need to roll it. It just went straight into profit the second it touched it. That was on our last session. Okay. It's way too far gone to make any decisions there. Again, if you don't, if you take a couple trades and they go the wrong way, the best advice I could give anybody is not to chase the market. It's not worth it. It really isn't. And I say that because I myself, other educators I know have done that. You can't take a loss and just let it be. There's that human instinct of nobody likes to lose, or I'm gonna show it. And that's a horrible mentality to have. You want to have one of a businessman. Okay, if that didn't go well, how am I gonna do better next time? So the best thing you could do is just move on from it. Don't chase it. Don't stay making excuses saying, well, I'm gonna get it the next time it comes back down. No, if it didn't respect it once, it's more than likely not gonna respect it again. So if you notice, like this level here, for example, your 618, it respected it. Well, it did not respect it here. It kept dropping, didn't respect it here, respected it here, but didn't respect it here. Sure didn't disrespect it here, respected it here. Respected it here because it still went up a little bit. So you'd have barely cleared that one. Came down here, you would, let's see, yeah. It would have come down here, it would have shot down more, but closed up here, so that's respecting it. Here, chances are you may not have if you didn't roll it over. Okay, what do we have on odd NZD? Yeah, odd NZD. We're waiting for a level. Ah! Oh no, that's the one we're just analyzing. Let's see. Remember, I didn't stay trying to chase it either, so let's see what it does. What it's doing. Actually, I see a little bit of wick rejection. And it's still it's okay. It gave us the entry twice, but I don't know if it's gonna respect it or not. I mean, ideally it should, because that's our last level that we have, that last fib level. See what it does. See, and even though we didn't get this level here, which there's a chance that, would be clearing it, but because of that indecision candle, I didn't want to take it because it could just disrespect it. Looks like it wants to. The 45-minute is coming up, and that's where you could just see price just starting to go up and not come back, or it could just disrespect and come down here. What I didn't like is this indecision candle. This candle also doesn't look the best to me, but see what it does. Anyway, it's too late to take it. Gave the reaction so far. Hit our level perfect. We missed it. It's there for a reason. It's still rejecting hard off of it. Touched it again. We still have a minute left. Now, if we end up with a candle like this one here, we may be able to take it. I think the 45 minutes a great level for a reaction. So what we do is we minimize the risk. Let's see if it comes down here again. We could take it for that 45-minute mark. Because you'll see once the 45-minute hits, it's just going to make a big move. It's already moving. Good level. That was a good trade still. 45-minute, you'll see it'll either disrespect. No, it's going up. Jeez, it's okay. See what I'm saying is it comes down and it retraces at least halfway. And then the move goes. Kind of weird. It's taking a little bit to make a serious move. Yeah, you would have cleared that one for sure anyway. Made a percentage of the move down. But you see, it already respected. Would you take it again if you came down if it came down again? No. Because all it had to do was respect it once. It does not have to do it again. Now, if you're trading in traditional forex, then you can, you can actually take it for a long-term trade. This is, it's not binary. It's not, it's sensitive for time. So, like if we're going for scalping or intraday, this all this move took a long time to get to this point. Now you could take a traditional trade at this level, put a stop loss somewhere below your previous low here. You could do that. Put your stop loss here. Put your take profit way up here. And eventually it could go the right way. You could clear however many pips that was. Let's see, 50. Make a little like 20 pip run maybe. Just at 10. About 15, 20 pips, something like that. Okay, but can't get hung up on that one. Or yeah, somewhere. Oh, yeah, we're waiting for this one. That probably won't come down here for a while. Just consolidated in this zone. And the problem is, so I don't know who's well versed in consolidation areas, and consolidate is just the market going up and down, following a channel. I personally stopped trading inside consolidation zones only because I was, getting spiked out the last second, or I wasn't getting the best entry. So, I would, by the time it forms, it could already be wanting to break out of it. So, for example, this level here, say it went up, went down, up, went down. And before you start identifying where it's at, you either miss it or you get not the best entry. So like say you said, well, this is a good level here to take a buy. Well, say it's already this time of the day and you're waiting for it to hit here. It didn't go. Okay, now you say, well, it's been I give him back on this one. Well, this is a good level. I'll take this for a sell. Nope, goes all the way up. So I like to wait for a good level. This is one here because I see a little bit of a trend happening here. I expect price to come down here. Same way it broke out of that consolidation and went up there. I believe it'll do the same thing here. Bounce up, but we have an alarm for that. So I don't really do consolidation trading much. Don't really care for that. I use the 88 on that. either. GBP CAD. Missed that one. Missed that one. So at this level, mark out. The reason I have this price label at 169 is I was showing students when to put their alarm for the 886 level that I had here. And when they took that, 5 minutes of time passed. So I'm sure what it did, well, I know what it did is it went as high as here and closed below the 886 level, which was the 178. So they cleared that one too. Good thing that our students haven't lost them for the day. And today's, a pretty volatile day in the market. I go to its ultimate high, that point up there. I call it an ultimate high because that's the last high for a long time, which is here because sometimes we have to move it back. It respected it here and pretty much did it again. Now, I know I do a lot of fib levels, and it's really, really, really important to learn where you put those fib levels, because not all the time is it going to work right. You could put it here, yeah, it respected the 88, but say for prime example, say someone wanted to do, let's say someone wanted to do this move here. Where is it? This one's tough. Let me just erase it. So let's say someone wanted to do something like this and wait for, like, say the 886. Price was just dropped and never came back. So it's super important where you put your fib levels. I actually like that for a long-term idea. I think I'm even in one of these trades on traditional Forex. It's not a move I do. Try one more. Because those all look like strong fib levels there. Could be too ugly. Yeah, we'll break that. Let's find a couple more ideas here. Okay, so that went above the 50 EMA. I don't really like that we have a few different areas here. Would be looking for a zone, if anything, but that's kind of far away. Let's use this one here. Long term. Probably won't see that move. here's a possible one. NZD USD. Log me out. So I'll move this over here so I could re-enter. Hopefully we don't, oops. Hopefully we don't miss it. That's getting he's at 786, ain't it? Actually, I still believe it's gonna go up higher. And a lot of you may be wondering, well, why don't I take bigger trades? Well, the problem is when it comes to anything that has to do with trading, um, we don't want to make trades that just are here to entice anyone to, take that it's all about making money, which that's what trading is. However, organizations like the SEC, really don't like um, people and businesses doing it. I know, like the IM Mastery Academy, their educators cannot show brokers, it used to be they could show brokers and they could show their trades, and you would see trades going for, $18,000, $5,000, big trades. And what ended up happening is people were posting it on social media, and the SEC looks at it more like you're trying to entice people to, make investments that sometimes they can't afford to make, saying like, it's a get rich quick scheme or whatever it is. So that's why we personally don't show big trades. I mean, a $20 trade isn't very big. We keep it realistic, so this is something that you could do, and we can grow together. We have private mentorship where we have I think we teach close to 25 students privately, and they started accounts. I know one of our students started an account at $100. Their account is I believe it's already at 2,600. Never had to make another deposit, never took a bonus. It's just has been um, learning with us this whole time, and that, when you're able to turn $100 into thousands, that's pretty amazing. But you have to be super disciplined on your habits, your trading. You can't over trade. We're here to teach people how to trade. We're not here to take the trades for you. We're here to educate you on how to make a living from anywhere in the world. All you need is, internet. That's all you need here. That's all you need. So we're coming up on the 12 noon hour, and you can see big moves made now within 10 seconds. All I was trying to see is if it's going to go up to our 886 and then drop, because that's what the top of the hour can do. Or it could just drop and only abuse that level. That I tell you that there's one between the 786 and 886 that it's pretty powerful. So we're looking at 5.6 and you 5.6. It's pretty low already. and this isn't my favorite time to trade, honestly. I mean, I could still find setups at any session during the day. Just this one's not my favorite only because it moves pretty slow, or um, sometimes it just doesn't reach levels that you expect it to, as opposed to like if we're doing this at 7 p.m. Mountain Standard Time, you'll see those moves be made, and then there's ones that are super crazy, like the Tokyo session that ones really move. But times of the day are also where you see prices pivot. It's not random; it does it for a reason. So this is probably like from the opening of the day. Last night it was making all this move to go up. This morning was to come all the way down. This noon is supposed to probably pivot down. So that wasn't a bad area. Could still go up here and then drop. And by the end of New York, you may have this all the way back down to your zero. If this made a harmonic pattern, it'd be an ugly one, honestly. So we're getting to the point of oversold. It couldn't meet that 56 level. Let's see here. That was NU. Oh, what did I do here? I actually like that candle right there. I really, really like it. I should have caught it up here. Jeez. Yeah, this candle is a good candle to use. Let's see. Now I was gonna take this one because I liked this candle and the move it made. Some similar to this, where you saw it kept dropping. Just excuse me a second. Okay. Well, when I saw it go up here, I kind of liked it. Just I knew it would close down here, but didn't take it. And that happens quite a bit, honestly. There's days that we find the setups, the ideas as we're going, and for some reason or another, there's days where we are just a tad late, or don't see everything right on time, and we don't get mad about it. We try our best to we try our best to give you guys the ideas, and so you could see all these trades in real time. But the good thing is we show you that what we're teaching here has a good win percentage. How many ideas did we just take and see that went the right direction? That in you, we were waiting for the level up there, I said I like this candle to take it up here, but the price had already dropped, and it's good continue dropping. So we didn't take this trade, but that would have won. Okay, let's go through all the different pairs. So that's number one. T on cat. I don't believe we took one on. We stayed waiting for this one. Didn't take it. JPY. We didn't take one there. Odd NCD. Did we take one on? Was that the last session? I believe it was the last session we did odd NZD and cleared on that one. Oh, but yeah, so we wanted to take one here, if you remember that, because when we came, price had already moved up. We saw that indecision candle here. We said, well, it has to retrace a certain amount. Still respected it, gone up. It's been respecting it this whole time. And the reason for that is that it's last level. It's either going to respect it or break through it. But when you see an indecision candle, it's kind of hard to, gauge whether it's good to take it or not. But what we saw is actually, let me move this out of the way. Price actually came down to our level, to the T, and it was a win. No rollovers, no nothing. See, and this is the part that I didn't like. Well, I don't like is that it came down below our fib level, which it just overextended, but nonetheless, it stayed above it. Okay. And the riskier people would have taken it again. Well, you would have cleared also, but I don't recommend that. So that's two ideas. Okay. And sometimes, our students, they'll be able to see, what's going on here and take the idea while we're looking over here. That's the hard part. Well, not hard, but that's the part about educating, that we don't always get to take the ideas because, we are showing different pairs, showing different things. And we don't always get those trades or those ideas, I should say. Okay, what was the other one? Oh, we took wasn't the euro. Oh, we took those two. That was earlier. That's 4. Still waiting on that. We're talking about GBP CAD. That would have won 5. No. Into those. Yeah, 5 trades so far. You know, 5 or 6 trades, that's quite a bit. And we happen to find those during tough times to be in the market. We have, war going on, economic crisis in certain countries, and we're still able to make an income off of all this. And you didn't have to go to an actual job site. You didn't need to perform any manual labor. All we did was we stayed on for about an hour, actually between the two sessions, because one was like pretty short. So within an hour and a half, we took, I believe it was a total of six trades, and they all won. And that's according, we did it when the market's quote unquote tough, and not the best session. Well, for some of us educators, at least, it's not the best session to be trading, but we're still able to go 6-0. That's pretty amazing, you know. And I always tell people, all of the trades that we take are the best possible entries. We won't take them if we don't fall in love with those trades, those ideas. If we don't love the prices we're getting, we are not going to be taking any trades. We're not. So what I'm going to do here, I know I've done it in the past, I just want to show everyone what you can be doing, you know, what you could be making. You know, I don't ever recommend trading more than 2% of your account at once. So this little presentation here, again, I've always shown this daily compound interest. So say you started an account at $1,000, okay? And we're only taking 2% trades. Okay, a 2% trade out of 1,000 is $20. As you see here, something normal to get back with $20 trades is $12. That's 60%. Some of them we'll take 85, 75, something like that. But even if you average it at 60% of $20 is $12, okay? We try to strive for our students to make at least 3% a day. No weekends. This is about how many trading days there are a year, not including cryptocurrency, but we try to get you 3%. This is what you could get within 1 year time. Not a get rich quick scheme. This is just what's possible if you can be consistent enough to make at least 3% a day. Okay. Today we went more than 3%. Okay. Sometimes we go 5%. We've had certain days where, students will say, can we have another session tonight? And depending if, myself or another educator are available, we'll say, sure, we'll go on, see what we find within an hour. And sometimes when it's just a private lesson, not so much for taking ideas, we end up finding a few setups that are pretty awesome. And more times than not, we actually go above 3% in a day. Okay. So that's within a year's time. We go down. So today we had taken, I think it was 4 trades, and we saw the possibility of 6 trades. Okay. So at $12 each, and that's basing that we're going off the minimum of 60% back on $20 trades. That was more than $30, and that's all you needed to make for today. Right now, I'm not sure if I mentioned this, but I'm also live on for some of my students, and they've been taking these trades also. So I know for sure one of my students took all 6. And at a payout of at least $12, made way more than 30 All you needed was 3 trades. You saw those trades complete, some in rollover, and that's the thing with rollover is, that $12 all of a sudden is like a $14-15 payout, so it's even more. So that's literally what we do. We try and make 3% based off of your trading account for the day. So if you started with $1,000, all you needed to make was $30. Next week, or I'm sorry, tomorrow you're supposed to make at least 30.90. All we need to do is find 3 trades. Here, 31.83 the following day. All you need to do is find 3 trades. And usually we're averaging, at a minimum 3 a day. Sometimes we find 5, 6 between a couple sessions. We actually end up sometimes going over 5%, but that always offsets if we have a bad day, which some days, we'll win 3 and lose 1 or 2. But if we go down in percentage to 2 trades, well, we don't want to keep trading anymore. We want to stop. We'll come back, and if we win 1 or 2 trades, or even say we win 1, lose 1, win 1, lose 1, lose the third one, we're done. We do not trade anymore. We actually end up just coming back in another session, the same day, another session, and we make our percentage then. And this is what can happen. 1 week, it doesn't seem like much, a week in the day, you're up almost $200. And I say this all the time: what savings account can you put your money in and make that kind of percentage back? This is, I am not IM Mastery Academy or any of these other companies that expect you to pay a monthly subscription that's super high, and you end up being confused because there's too many educators. They all have their own strategies. I'm not saying that they're not good, because I like their educators. But what happens is students end up going to various educators for the day, and before you know it, they end up confused because they don't know what strategy they're following. Everyone's strategy is a winning strategy. That's the easy part. Finding a strategy is really easy. Finding your setups may take time. They may take time to get to your certain levels that you want. And sometimes those levels, they don't get reached, and that's the hard part. That's the biggest thing to trading is discipline. Okay, it's discipline. If you're not making your percentage in the morning, stop. You lose a couple of trades, stop. Market's gonna be the market. It's gonna do what it's gonna do, but there's always opportunity. And that's what we're here to do, is help you find the best entries, show you a couple different strategies. Not all strategies really work for every single person, but if we can show you, well, try this. This is how it works. This is what you're looking for. This is what you're waiting for, and you'll be good. More times than not, these people are going to succeed. But discipline's the absolute biggest issue when it comes to trading, because people cannot stay disciplined. And if you can, well, this whole plan here, this daily compounding plan, that's more than possible for you. Now, of course, you don't say, well, I'm going to fund a broker, make this, and expect to withdraw it all right away. That's not what you do. This is an investment. This is a plan. This is your future. Okay? If you can't handle making $30, $30 to $40, these, a day for these 2 weeks, without getting emotional, without over trading, without blowing your accounts, how are you going to handle it when this is what you're supposed to make a day? 2,200, 2,900. How are you going to control your emotions to even get to those numbers? You have to respect the small profits in order to be able to get to the big profits. Okay? That's what needs to happen. Next winter or this coming winter, look, $10,000 a day. And I guarantee you, you will not make that amount if you cannot respect being happy with $30 a day. You won't do it. I'm sorry, that it won't happen. And unfortunately, it happens all the time. And that's how come we tell our students, you will never, ever see those big numbers if you are not disciplined, if you are not consistent. We don't sit here trying to get rich off of people. We're trying to enrich in people. We're trying to bring some light to them and show them that, you don't have to live in poverty. You don't have to struggle to make ends meet. You don't have to, you don't have to go through life hurting when you can learn something that people do every single day. There's nothing wrong with when you're at these prices or, making these percentages a day and saying, okay, my account is here. It's going to go up to here. And I'm going to treat myself to this number from here. A broker's not going to have an issue knowing that you have this amount and you're only trying to withdraw this. Try to withdraw 50% of that. That's going to cause a red flag. And ultimately, why would you? Because if you took out half of this, you have to go all the way back to here just to start all over again. And I don't know one person that truly needs to make this amount. I don't know anyone that truly needs that amount to live. Not one. You could have any single vehicle you want in the world. I mean, yeah, I get there's super pricey cars out there, and you don't need a super pricey car. You could even have an Escalade, and that's enough for months of payments with a home. But if you can't respect, $30 a day, you're never going to get to this point. Because if you can't respect $30 a day, you'll never make it to this amount. What happens this time next year? Look at that. February 23rd. You're gonna want to make that much a day? I seen educators on IM Mastery Academy making that in one day, in one session, if not more. I saw the educators make that. But you think that they were over leveraging, they were over trading, no. They had to remain disciplined. And it's hard. But, that's what we're here to help you do. Because if you look, $30, what you're trying to make a day, that's just the very change of what you can make in a day. But the most important part is, how are you going to stay consistent enough to even get there? Most people won't even make this right here. In certain states, I've seen that someone works all week, 40 hours to make this, what you can make in one day. Today, I gave 6 ideas. 6 ideas. In the matter of a couple hours, an hour and a half, 6 ideas. And that was double that, more than double that you're supposed to make for the day. You know, I'm not here to try to get rich off of anyone, because if I want to get rich and I want to stay rich, I'm going to be doing what I'm doing. All I'm here doing is educating people on how that could happen for them. If you want to join us and you want to, you know, be making these percentages, you could follow our ideas. You know, we're not uh, regulated signal providers or signal providers in general. We're just educators showing how to analyze the market. You know, stick around a month, stick around 1 month, your account could have almost doubled. Try. I challenge anybody to open a savings account, put $1,000 in it, and at the end of 1 month, I want you to have this amount in there. Don't put any additional funds into it. Go off of the interest you get. I dare you to see how how much interest you get off of $1,000 in 1 month. Okay, stick with us 2 months. Sorry, where was I? So 1, 2, 3, 4. Triple your account. I want you to try that. You know? So yeah, those are the amounts you can make if you just can stay consistent, be disciplined. So anyway, we're going to wrap it up here. If you're interested in joining us, follow our Discord. It's up on our banner. And we will see you on the next video.